Hello, and thank you for joining us for our second cybersecurity webinar. NBT's President of Commercial Banking, Sarah Halliday, will kick off our webinar today, followed by our featured presentation. At this time, I will turn the program over to Sarah.
Good morning. Thank you for joining us today. If you participated last week, you know that our team of experts has been working hard to compile the latest information on all facets of addressing cyber threats. And we're very excited to share that information with you today through this virtual cybersecurity series. In my role with NBT Bank, I take pride in events such as these, where we can play an active role in helping our customers with the knowledge and tools they need to identify and protect themselves from cyber criminals looking to take advantage of their businesses for financial gain. Today, NBT Insurance Agency President Tucker Lounsbury and NBT's Director of Cash Management and Government Banking, Margaret Scopelianos, will explain how to integrate cyber liability insurance into your cybersecurity program. They will also discuss the importance of understanding and leveraging existing banking controls to protect your financial assets. Tucker began his career with Great American Insurance Company as a commercial lines production underwriter and management trainee before becoming an insurance broker and agency owner in Central New York. In 2003, he sold the Lounsbury Insurance Agency to M&T Bank and rose to Northeast Regional Executive at M&T Insurance. A certified insurance counselor, Tucker uses his more than 2 decades of experience in the insurance industry to help counsel NBT insurance agency clients on the best protection to fit their unique needs. A lifelong banking professional, Margaret directs our company's cash management services, which provides payments and liquidity solutions to commercial entities across NBT Bank's footprint. At the helm of NBT's government banking business, she also leads a team of relationship bankers serving the financial needs of municipalities, public schools, agencies, and authorities. Margaret is a member of NBT's ALCO and deposit strategy committees, which determine rates and funding strategies for the bank. She brings leadership experience in credit, treasury, and risk management to NBT from previous roles at global financial firms in the US. Thank you for joining us today. Tucker and Margaret, I will turn over to you.
Thanks, Sarah, and welcome everybody. This is our second installment of our 4-part series. But honestly, when it comes to risk management, there couldn't be a better topic for us. Cyber is a big topic, and it's very present today in today's society. So jumping right in, I just want to go through our agenda and what we're going to talk about. We're going to start off with talking about insurance strategies. We'll talk about cyber liability, and we'll also talk about crime insurance. Then we'll go over to Margaret, and she'll really bring in the banking controls and different risk management techniques that you can use to protect your monies and your accounts. And then it'll come back to me, and we'll finish with some incident response planning and what policyholders need to do as cyber policyholders and crime policyholders. So insurance strategies, we'll move right into this, and we'll just start off. If you did miss last week, clearly this topic of cyber insurance is all predicated on the activity in the landscape today. And we'll just talk about a few key statistics that really are eye-popping. When you think about almost $4 million for a cyber loss today, that's a big number, and I think it surprises a lot of us. Now, that's the largest companies in the world and the smallest companies in the world combined. But there's the United States, the highest country cost. Not a surprise, we're under attack. We'll go here to healthcare, and healthcare is clearly, as you might imagine, with all the information that needs to be protected with private health information, healthcare is clearly a big target. But this statistic is probably the one that popped out the most at me, and I just think for all of us, gives us a moment of pause. 280 days is the average time that it takes to identify that you've been breached and to get that breach contained. So think about that. Over 100 days, you're going to have cyber criminals in your network doing what they're doing and not even know about it. Tells you how important this really is. 80% of incidents included with breaches have private information stolen. You know, think about that. That's just 80% of any cyber incident takes private information from your company and it's disseminated on the dark web. Really, really staggering. Now let's look at insurance. How does this relate to insurance and cyber insurance specifically? When you think about an insurance claim, it's important to think about what makes up that claim. And here's some statistics that I think will tell you, what do you need to buy? And we'll get into that next. But 51% of an insurance claim goes into consulting and legal services. That's a big number, and you just need to be prepared that it's a team of attorneys and it's a lot of consultants when you do have a breach. 26% is restitution to victims. So think about this as cyber liability, and that's that third-party exposure. 30% now is going towards regulatory fines, and that number is growing. We're going to talk a little bit more about this later in the session, but there's a lot of legal environment and requirements around what you have to do if you've had a breach. And then recovery of technology. That's self-explanatory. We know if we have a down network, we have malware or spyware that gets in, we're going to need to have those experts in there to repair and recover your technology. And then last, which came up last week in Tara and Andy's discussion, was about ransomware and extortion. This is probably the one area that's growing the fastest. And that's troublesome from my perspective, because right now this is 10% of insurance claim costs. We see this as the fastest growing area to be aware of and to be ready for as the cyber criminals continue to advance on this front. So let's dive into a well-structured insurance program. And what does that mean? Think about cyber coverage. For the most part, many of us have been buying that for the past decade. It's been readily available. We've purchased policies, probably minimum basic policies for most of us. We put them on the shelf, and we hope that we never have to use them. The one challenge that we have today is there's been a lot of activity. Frequency is up, severity is up. So our customers are dealing with this more and more each day, and our insurance companies are dealing with it. So one of the things I want to point out here is it's not just signing up and buying an insurance policy anymore. One of the things you have to do is actually qualify for coverage. 2 years ago, you didn't even need to have multi-factor authentication and you could buy a cyber policy. Fast forward to today, very few insurance companies are going to insure you if you don't have the multi-factor. And the other piece of this that's happening is with the frequency, we're starting to see costs go up. And why is that important? Well, this year, if you have a cyber policy, you're looking at, depending on industry, either a 10%, maybe a 20%, or potentially a 30% increase in rates. And at the same time, you might actually have your insurance company scaling back coverage because of all the frequency and severity that they're experiencing in their book of business. It's important for us to do more that we can control within our companies and with our risk management planning to make sure that we can buy this insurance still and do it affordably. The second piece is crime coverage. This is generally or traditionally a separate insurance policy, and it's one that definitely needs to be coordinated. So when you think about crime coverage, think about we do need to coordinate this with our cyber so we can protect the monies that could be potentially stolen. Last but not least is what do we do after we place these policies? We can't just set it and forget it. We've got to be working to continue risk management and be prepared and plan for that event. So we're going to dive into insurance policies and we're going to get into the basic structure of a cyber policy and what's important. So as you're working with an insurance professional to design your cyber insurance coverage, I'm just going to call out some of the areas that really need your focus. And clearly this is a boiled down group of coverages, but I do want you to know this is right from a national insurance carrier policy, and they're all very, very similar. So this will apply to any company that you would work with to place cyber coverage. The first thing I'm going to point out is this privacy breach notification that comes with this first party expense. And when I say first party expense, I should back up and say, think of this as property insurance. This is expenses that are going to affect you and your company, and it does not affect or it's not involving the outside or third parties. So we first start off with privacy breach, and this is really important to get right. When you think about the regulatory environment that's here today and what's going to require you to do notification and potentially credit monitoring, you have to set this limit correctly. Base policy is $1 million, but if you're a large financial institution or a very large professional firm, you might need $10 million of coverage here. And think about it this way. Each record that you lose, it likely costs between $100 and $200 per record, depending on the type of loss, to do the notification and credit monitoring. So think about that. 10,000 records stolen at $100 a piece, that's $1 million. You've blown your whole limit. So set this accordingly. Computer and legal experts, we started off saying this is going to chew up a lot of the claims cost. Just know right off the bat, the legal team and all those computer and forensics and mitigation specialists are really going to be involved in your network. Cyber extortion, this came up last week, and we're going to talk a lot about it today. This is the growing area of concern. For this coverage, you want to make sure that your policy is going to pay out in US dollars or cryptocurrencies. Believe it or not, the cyber criminals, they want crypto. And we're seeing insurance companies paying these claims in cryptocurrency. So you need to know you can do both. And then data restoration, public relations, pretty self-explanatory. But if you're a professional organization, a retail organization, think about public relations and how important that is to spend the money to regain the public's confidence. Part 2 of the first party loss is your business interruption coverage. So again, still part of what we would call property coverage for cyber. And the first piece of this is business interruption. Think about it. We all have networks. If those networks go down, we very well may not be in business that next day or that day. And think about 3 days, think about a week, think about 2 weeks. Just this past 30 days, we had a national insurance company actually have an extortion incident that locked their systems down for the better part of a week. And that's a national, one of the largest global insurance companies had an attack. So think about that when setting your loss. How long can you be down before you have meaningful revenue loss? The second piece, dependent business interruption. This is something that needs a lot more focus. And I think you're going to find that the most recent claim that came was the SolarWinds. It's a national global issue that hit in the last quarter. This is a big deal. It brought attention to the fact that so many businesses rely on third-party vendors to be part of their network or their community. When you think about your business, if you were to lose a vendor that is required to stand your business up and operate, you need to set this limit so that you look at each of these vendors and set a limit that's appropriate. Now, I have put this, and you'll see it's a $100,000 limit compared to $1 million. Carriers are very reluctant to put big limits up for dependent business or interruption because they need to underwrite this very closely. So take the time and effort to know what you need in this area. Now moving to third-party liability. This is where lawsuits come, and this is where the regulators come. Think first of privacy and security, that private information that's required of you to protect. And I want you to think of this in not just electronic or cyber. These policies are established to take care of an electronic breach. They're also built to take care of a just physical breach. You could have employees that are selling Social Security numbers, physically taking them out of the building and selling them into the black market. That would also trigger an event under a cyber policy. It has nothing to do with actually getting a computer issue within your organization. Payment card costs, PCI. Think about what's required of you if you're dealing with credit cards and the different type of indemnifications that you have within your contracts with the different vendors you work with that would require you to indemnify any loss. Make sure you set that limit appropriately. Media, we all have websites, we're all on social media. We have to know that we've got this taken care of when it comes to a cyber or a breach event. And then last is the regulatory proceedings. This is a big deal because it has grown exponentially. New York State was the first model state a few years ago that launched laws around what's required of a business if there's an incident. That model law has now stretched from Maine across the country into several states all the way to California. So just know, you've got to know what your legal requirements are in each of the states that you operate. Set that limit appropriately. Now transitioning to a completely separate policy, or what might be a separate policy. Crime coverage is traditionally purchased on a separate crime policy. And these 6 coverages right here are the old line crime coverages that you need 50 years ago and that you still need today. So take care of that, spend the time to set those. But let's look at this. These 3 modernized crime policies coverages need to be added to your commercial crime policy. Think about computer fraud and funds transfer fraud. These are the areas that protect your accounts as you're moving money around electronically. And clearly, this is very important from a banking standpoint, that you set these limits appropriately with the size wires that you send and with the type of exposure that you have within your individual organization. Then I'll point out social engineering fraud. This has nothing to do with any breach of your system. This has to do with really good criminals that can call on the phone and project that they're the CFO or the owner of the company and that they want you to overnight $5,000 with gift cards to their home. And you would be surprised at how many companies get duped into this. That limit needs to be set appropriately. And hopefully you don't need high limits there, but I've clearly worked with companies to set limits that are $500,000 and higher. And on the computer fraud front, we've had losses where we've paid claims that one of the companies I insured had 2 wires in one single morning, totaled over 500,000. One of the wires was tracked down and was claimed, and the first wire that went out moved to 4 banks in a half an hour and was in Europe, and that $250,000 was gone. And the insurance company on this policy paid for that. Now we'll just transition. Take your corporate hat off for a minute. I thought this little nugget would be helpful for everybody on this call. Think about your home. Many of us have started working from home, that's for sure, but that's still the corporate environment. Think about your own personal accounts. You have online banking, you've got your brokerage accounts, your different accounts that you've set up for your family members. That's all susceptible to cyber attack too. And there are solutions to give you some protection here today. 2 years ago, there really wasn't. In the last 2 years, most of the personal insurance companies, those folks that sell homeowners policies, have started to develop these endorsements to put on your homeowners form so that you can purchase ample insurance for this exposure. Today, my insurance company doesn't actually have this endorsement. It's at the New York State Insurance Department now awaiting approval. They'll have it within the next couple of months. But we do have many that are selling this now. And for less than $100, you can actually purchase a $100,000 cyber limit on your homeowner's policy. Please talk to your insurance professionals about taking care of this known exposure. All right, that wraps up really the cyber policy. I'm going to turn this over to Margaret now, and she's going to get involved with the whole banking defenses and risk management from their perspective on the bank side. So Margaret?
Thank you, Tucker, and good morning, everybody. To set the stage for this segment, let's turn our attention to some important market statistics. As you can see, this data clearly reinforces the need for vigilance in protecting the financial assets of your company. My comments today will primarily focus on fraud protection measures in 2 key areas, check and ACH. Checks are still the most prevalent form of business payments, and these represent nearly half of all deposit fraud. Think about this. Your full unencrypted account details are found on every check in plain view. So this provides easy access to your accounts by criminals. ACH fraud is the second key area of risk we'll address today. And this type of fraud was reported by more than half of the companies in 2020, an astounding rate and figure. Our Federal Reserve Chairman Powell recently, during an interview, stated that cyber attacks are the #1 threat to the stability of the global banking system. Now, we know that these criminal activities are highly organized and well-funded. So how can your company protect itself and avoid becoming a victim? Let's review some top defensive strategies. There's no silver bullet when it comes to cybersecurity. However, in combination, these 8 best practices are a common sense basic requirement for today's businesses. These actions are within your control and they effectively reduce risk. Many are self-explanatory, but I'll highlight just a few. When it comes to system credentials, it's all about password management. Encourage your employees not to share their credentials. You would be surprised how much of this we still see. Also, encourage your employees to use a unique and different password on every application that requires a password. Secondly, we recommend to our businesses, where possible, establish a separate computer that is used only for online banking transactions. By limiting internet usage to bank sites only, you can mitigate the risk of cyber attacks. Now, last week you heard about phishing from Tara and Andy. I'll only remind you here of the need for vigilance on even internal company emails. Those can be easily disguised and compromised and allow someone into your systems. Some companies choose to establish a separate account just for incoming ACH and wire transactions, which is a best practice. At the same time, I will talk later in the presentation about a unique service that provides an alternative to this practice that you may prefer. Lastly, on these management practices, I'll remind everyone to please dedicate and invest resources towards IT to ensure your company is protected. For example, are your systems using up-to-date antivirus software? Do you have reliable backup arrangements for your data? So these standard business measures in totality provide a sound risk management foundation for your company. If you think about it, criminals are relying on the failure of your business security measures to create their opportunity to access your funds. And really, it only takes one mistake, one redeployed password across your employee base, for example, to open the door to criminals. Let's turn now to some banking industry tools that are available to help you. These are highly effective and affordable ways to protect your assets. By deploying these tools, you can avoid the time and expense in recovering claims that Tucker described just a few minutes ago. So the first fraud protection service I'd like to cover that all commercial customers really should be using is Positive Pay. So how does Positive Pay work to protect your assets? Well, for checks, in simple terms, you provide the bank with an electronic file that lists all the checks that have been issued by your company on an ongoing basis. The bank digitally compares this list to the checks that are presented for payment as they come in each day. If any of those data points don't match, that particular check is provided back to you digitally for you to review and decision. Is it legitimate and should it be paid? Or you could decide to reject it and return it. Similarly, for ACH, you provide the bank again with a digital file, but in this case, it's a list of your authorized vendors. You can also choose to take advantage of the option of imposing dollar limits for each vendor if you prefer. So only these entities are pre-authorized to debit your account for payment. And if an unauthorized debit is presented to the bank, that item is delivered to you digitally for your decision, pay or reject. Now, in summary, you can rely on the Positive Pay service to identify unauthorized payments and intervene prior to clearing your accounts, rather than afterward during your monthly reconciliation routines, for example, when it's often too late. The notifications are provided to you by email or text, and the process is typically managed on a user-friendly application within your bank's digital banking platform. By subscribing to Positive Pay, you enable the bank to conduct enhanced due diligence on your payments every day at a very low cost to you. And you're essentially leveraging your bank's full employees and technology resources. Keep in mind, the banking system is expected to process and honor payments without visibility to a company's origination activities. So without the powerful intervention of positive pay, your bank has no visibility into the checks you issue or the ACH vendors that you authorized. Positive pay is an effective, affordable, and convenient fraud protection for both checks and ACH. And these are two of the key areas we mentioned earlier that are experiencing a very high rate of fraud. Moving on to another ACH tool, let's look at UPIC. This is a unique fraud protection tool about incoming ACH payments only. You probably know that in order to receive incoming ACH credits, you must provide that vendor with your account details. A UPIC service enables you to accept those incoming ACH credits without divulging your account number to the sender. So how do we do this? The bank provides you with a unique routing number and account number for your ongoing use with vendors. This masks your real account information. And keep in mind, the UPIC service is limited and it only works with incoming ACH credits as a protective feature. It's not capable of working with debits to your account. So therefore, it cannot be misused to facilitate unauthorized transactions on your account. Very effective, very affordable. It also allows you to operate safely within one consolidated account if you prefer, rather than that other best practice I mentioned earlier, whereby you could create separate accounts to achieve the same type of protection. And then lastly, we urge all of our business customers to establish dual control arrangements. This is a best practice when it comes to electronic transactions, such as payroll, ACH, and wire transfers. And this is a no-cost solution to you. It requires two separate individuals at each company to execute payment transactions instead of one. This reduces the risk of fraudulent transactions by prohibiting payments that do not carry a second authorized approval. It also mitigates internal fraud, and it reduces the risk of human error since a second employee is reviewing transactions before a payment is processed. In summary, these banking solutions are essential, low cost, and preventive services that all commercial customers should be using. The risk of fraud is pervasive, but your company can mitigate the risks by deploying a combination of vigilant business security practices with banking solutions. Tucker, this concludes my remarks on fraud defenses and banking tools. Back to you for incident response planning. Thanks.
Great, Margaret. Thank you. So you've got insurance policy, you have your cyber policy, and you have your crime policy, and you've got your banking controls all in great order. So what's next? Well, best practices would say, let's not just buy a cyber policy and then set it on the shelf and hope that we don't have a claim. Let's work as we go through every year in making sure we stay current with a very fast changing environment. One of the great things about paying for a cyber insurance policy is you pay a premium for the protection, but you also get embedded with most of the national and global policies, a really nice suite of risk management tools. And use those tools. We recommend that you take advantage of a virtual CISO coaching opportunity. Have your IT folks connect with them, or your managed service provider connect with the insurance company pre-claim. Conduct the social engineering tests. Tara and Andy talked a lot about that last week, and that's probably the most important thing we continue to do. Security rating reports. You get an annual report from most of the insurers that'll go in and do a little bit of report analysis to see, are you current? Do you have what you need to be safe and protected? And the self-assessment tools, self-explanatory. Always test yourself and assess how you stand up. But most importantly, I think this online incident response plan tool that many of the insurance companies offer is a really good starting point. Sit down with your team and develop what you're going to do when this type of an incident hits. And it's not, if it's going to hit, you really should be thinking about when it hits. And you'll just see some names there that are listed. These are national vendors. Pretty much all the national insurance companies work with these companies to provide these tools to you, and most of them at no extra cost in addition to the premium you pay for the coverage. And then the next step here is clearly the plan. Work with a plan, develop a plan. The first step there is to actually work with the insurance companies and your own internal folks to develop that team. You're going to need legal and defense counsel. You're going to need an investigation or forensic team. You're going to probably need who you're going to actually call as a vendor if you do need to do some credit monitoring or mail center work. And again, think about that regulatory environment that we're all in. This is going to be something that you've got to be ready for. Extortion and ransom experts, this is the fastest moving area of any of the cyber exposures that we have. You're going to have experts to deal with this when it happens. And then public relations, get you back up on your feet and standing. And then finally, the breach response practice. Practice, practice, practice. If we don't practice or simulate what that war room is going to look like at the time of the event, you're going to all be tripping over each other, and we're not going to be as quick to react and to control the situation at hand. So next week, when we have our third part of the series, we're going to actually spend some time diving into exactly what an incident response will look like on that day when it happens. But boy, wouldn't you rather practice a little bit beforehand? And we call it tabletop exercises. Those are opportunities most insurance companies actually offer to you. Many of them do it at no cost. Some do have a slight expense to do this. We highly recommend you go forward with that. And then the last component here is just picking out your team. And this is just a sample from commercial insurance companies of who you have for national vendors. This doesn't replace your corporate attorneys. This is just specialists in the cyber that will help coach and direct your response. And then finally, the different specialists in the forensics, loss mitigation, and then clearly you see the Ackerman group, cyber extortion and ransomware. So that really concludes our comments today in wrapping up cyber insurance and the banking tools. Please join us again next week for our next third event, where we're going to bring together our team to take you through what happens and how to do a really good incident response. Thank you very much. Have a great day.
Please join us again next Friday as we continue the series with After a Breach, Effective Incident Response, hosted by Director of Information Security, Tara Carnwright-Granata, Information Security Manager, Andrew Frisbee, and NBT Insurance Agency President, Tucker Lounsbury. This concludes our webinar. Thank you and have a great day.